Hello traders, it's Gregor here. I want to give you a quick update here today in a video format because we can see that some markets are moving quite sharply at the moment. We see euro-dollar falling based on a weak PMI readings. So generally speaking, as you know, I didn't look at euro-dollar much in the last few days, or even dollar-yen, because it's the most important when it comes to analysis and trading is trying to recognize the sideways price action and remove this market from your list until you see a breakout. Okay, so because in consolidations, as you know, anything is possible. We know multiple corrections can be flat, can be triangle, can be double zigzag, whatever, can be combination. So if you don't see a clear pattern, it's very important that you rather make a step back rather than forcing some wave counts which are based on your personal bias or personal opinion. So it's very important to go through that period and trying to just ignore whatever it happens until you see a breakout. So looking at the euro dollar here, still tracking, I was tracking two wave counts. As you know, we also updated you on the Elliott wave counts page on those primary analysis that this bullish count is still valid, but it's not in play until we see 1470 breakout. Also, we are looking at this bearish wave count, which suggests that we may actually see a very strong push down into wave C to complete this, to finally complete this wave B, which I think it's still valid because price action is very slow compared to the previous declines. So in my opinion, we will see a reversal, but I would not be surprised if maybe this will happen from a new low. Okay. Also, if you take a look on dollar index, I update you on this page as well today and said that that probably we will see a new high based on this latest interpretation, where this can be even a wedge or ending diagonal here for a wave C, which means a reversal from a new high. And also, if I update you real quick here, this can also be now breaking higher into wave C here. Okay, so as you can see, we are finally seeing these breakouts. So maybe if this triangle on the right is the one that we should track, maybe now it becomes very interesting for a 5-wave rise higher into wave C. Okay, so the lesson here is, if we have multiple counts in a sideways range, just leave this market on the sideline until you see a breakout. Okay, because once one of your wave counts will be confirmed, then it will be much easier for you to make the next prediction. So still, euro dollar, dollar index, I'm watching those, but I don't see nothing useful, at least not yet. Okay, same thing on dollar yen. Dollar yen, I really must label this as a bullish interpretation, because after all, we have seen a free wave retracement and we are now rising. So I think that more gains could be following. Okay, of course I will observe the S&P 500 and especially Nikkei futures, what is going on there. But if we see Nikkei trading aggressively to the downside right now, okay, but dollar yen is not following. So what we can expect when Nikkei maybe stabilizes at a new low? I think that the new strong bounce on dollar yen can be coming and send prices maybe even to a new high here, based on this interpretation into wave 5 for this ending diagonal. Also, what I'm looking at on the S&P 500, since we are talking about dollar yen and Nikkei, on the S&P 500 is my new look. It's actually an ending diagonal here, moving lower into wave C. So this is, I really like this this development, because traders, investors will try to turn even more aggressively bearish once we approach to February lows. They will say, yes, uptrend is still not here, we are going back to the lows. Maybe we are in a new phase of a bear market. But looking at the price action here, we see some overlapping activity here from the last 3 weeks or so. So ideally this is an ending diagonal, and actually this retest of February lows can be a 5th wave of decline to complete this wave C. So now imagine how perfect this ending diagonal would be to cause a new bounce, especially from psychological perspective, because as I said, February lows will be here. A lot of traders will try to turn aggressively bearish once more on stocks, but again, too late, because prices will already be too low, okay, at least based on what I'm looking at right now. But it's very important that whenever you're tracking any pattern, especially the one that you think that market will bounce, it's very important to understand what is confirming price action, because if I'm tracking an ending diagonal, it doesn't mean that I'm actually correct until this is proved by the market. So what you want to see is, ideally, we'll see a retest of this area right there in 3 waves down for a wave 5, and then reversal higher. And only if this reversal, this bounce, will be seen in 5 waves, only then this will be my confirmation that market is turning to the upside. And in fact, in such case, I would be even interested to look for some long opportunities. Okay, now let's take a look also on Aussie dollar. As you know, I have announced and went short yesterday when market was trading at this area here, because I saw a very slow overlapping recovery. So I thought, okay, this is unfolding now for some time. We have plenty of overlaps, so I would not be surprised if maybe we already drop from those levels. I know that we haven't seen any big pullback here, but that doesn't mean that we should see a big pullback. Maybe this means that bulls are not even that strong that could make a pullback for maybe 50%. So it means that bears are very strong, okay, because bulls cannot take price even higher, even if they have a lot of time to do it actually. So in my opinion, I would not be surprised if this is already wave 3 underway and we go to much lower levels. Also keep an eye on gold. We see gold finally reversing below a 1240 area, which could be an evidence actually that gold is stopping and that we have more downside to come. So if that's the case, then you know that Aussie could actually be just it could actually see just even more damage ahead. Now here we also have dollar against the Chinese currency. You can see that we are tracking here a triangle formation here, so there's plenty of room for this fifth wave to rally above 7, which means that Aussie dollar could remain in downtrend. So that's why I'm looking for potential wave 3 sell-off. If we'll see any bounce here, then of course what you should be watching based on this latest interpretation is this one, this level here at 72.15, because this represents end of wave 1, and you know that wave 4 should not trade above this level. Okay, so I will definitely make sure to pull my stops lower, and of course I will announce this on our website as well. So that's for Aussie dollar. The next one is Swiss franc. As you know, we have seen a nice 3-wave retracement. We are now testing this upper trend line, and I think that this could be a very nice breakout actually for more upside, especially if we consider that rise here on the hourly chart was impulsive, okay, from the lows, and we have seen a nice pullback, which I firstly thought that we'll see more complex wave 2, but it appears that again bulls are so strong on the dollar side that bears were not been able to make any deep pullback here. So I really like this one, and I think that parity could be seen very soon. And if we see a decisive break above this resistance, then you know that this would be confirmation that we are going back to the highs. Okay, now let's take a look also on crude oil. Now crude oil for our chart. As you know, I'm bearish here and should look for more weakness, because after this drop it's very normal for market to move sideways. So it's a little bit pause within downtrend, and ideally that's a triangle in the fourth wave. So I would not be surprised if we see a final wave 5 to the downside towards 45-47 area and then a bounce. And what is very interesting, I know that a lot of you are probably interested to go short on this one, is that we can be here trading now in a wave E after a reversal yesterday from this 50.27 area. Okay, we haven't seen a break below 50, so actually this decline from 54.20 can be seen as a wave D, and now we are completing wave E of this triangle. But what is my concern? What is really important here is that you know that triangles can be very tricky. They can occur in wave B position, okay, and then you see push to the upside for a wave C like this, and then you see turn to the downside after the market takes this former swing high out, okay, right there. So the important is that you wait on a confirming price action, because especially because this rise was very strong yesterday. It can be treated as an impulse actually, okay, on a smaller time frames. So if you want to be on a safe side, there are two options. Either you have ability to go short with 50% here and you add 50% at higher levels, okay, and then you expect a pullback after deeper ABC recovery, okay, or you just simply wait on this, which is my favorite interpretation, where you can easily wait on this rise to be fully retraced, okay, because if strong bullish price action is completely retraced in less than, or let's say in 24 hours, then this is very strong evidence that bulls were very temporary and that bears are the one that are taking the direction. Okay, so in my opinion, if we'll see a retracement today of this whole wave E rise, then this would be confirmation that we are headed much lower. Okay, so watch out also the candlestick formations. I have here candlesticks, let me take a look. Okay, I will switch to daily. I will hide this. Okay, so you can see here very aggressive, actually bullish reversal candlestick. Okay, this is very dangerous. We have seen a break to a new low and then close at the highs. So if this yesterday's swing high is broken, this really could result for more gains ahead. So it's very important, at least for my taste, to wait on a confirming price action. And if this whole candlesticks, okay, would be fully retraced today, then this clearly would be evidence that this bullish rise is not worth anything at the moment, and that bears are ready to take the control over. And in such case, I would be looking for more downside. So in that scenario, okay, show 1 hour. Okay, and in that scenario, of course, if you see this drop, you wait and pull back. And bearish confirmation level is obviously 50.27, okay, because this was a wave D point. Okay, traders, actually, let me check if we have anything else. Oh, I have Euro Pound. Okay, just a quick look at the Euro Pound. Okay, so Euro Pound, it held this level. Here we haven't seen an overlap with the wave 2 here, so actually this bullish count still remains valid, but as you see today euro dollar is quite weak, so but there are issues with the pound because of Brexit, so it will be very interesting if this market is really going to see a step high, another step higher, or it will rather stay sideways. But what is interesting that there were some overlaps here on the hourly chart, so this price action is quite important. I mean, if we really can hold this level, then we'll still have a chance here. Okay, but if we see a break today, or maybe even we move close to this level, then I would probably keep this euro pound on the side and would likely close my longs and be aware of potential deeper pullbacks. Okay, after all, we are reversing from this very important trend line, so you really have to be aware of potential another deeper pullback here, because we haven't seen a breakout yet after all. So watch out for these levels here at 89.50. I think this will be a key. If it holds, bulls are still alive. If we will see a retest of this level, then I think that we are going probably even lower. Okay, traders, thank you very much for the attention. I hope that you loved this video. If you have any questions, I'm in chat room, send me an email, whatever. Okay, have a good day. Bye.